Namaste everybody, myself Basis bring another video for today with the best investment options in India part 1. So let's begin. What makes you that good investment options? There is a several factor to measure the effective of the savings and investment plan, from the flexibility of the investing to the amount of the tax exemption allows, and the financial plan should be aligned with your life goals. For the most of the investor, if you list down the following factor influence for their investment decisions. Number 1 is the freedom to invest and withdraw anytime. The number 2 is the flexibility to invest any amount. Number 3 is the safer risk return proportions. Number 4 is the custom investment period. Number 5 is the tax benefit and other benefit. Depending on your goals and needs, you can decide it which factor has more significant for your long-term investment. Also, you cannot have the best of the world because every investment have a few advantage and also with the disadvantages. What are the type of the investments options? You need to investment in a plan which fit the needs and the purpose of your investment. Thus, the investment plans can be broadly divided into the three types of based and the possible uses. Number one is the growth investment plan. Number 2 is the safe investment plan, and number 3 is the income investment plan. So, what are the growth investment plan? Growth investment plan is long-term options, usually aggressive and volatile, have a lock-in period, do not allow the premature withdrawal like ULIP, PPF, NPS are the few examples. The safe investment path is the medium-term investment options, and this investment keep you capital safe, don't allow the withdrawal within the few years of investment, and it has a guaranteed savings income investment plan. Number 3, it's a low risk investment plan and that turns the lump sum investment quarterly income and the plans the small equities allocations. This is like the pension and the senior citizen saving plan. So what are the best investment options in India? Generally, the investment plans help you to attain your life goals if you choose them as per the financial plan that you have. Whatever you have a short-term goal or the long-term financial goal, consider your financial milestone and choose the plan accordingly. Let's consider the stock. Directly equity number 1 is the directly equity stock are the one of the best investment options for the aggressive investor. Investing in the listed equity stock of the companies of the stock exchanges is known as a direct equity investment. You can get the capital gains or dividend returns from the direct stock investment, and the performance of the stock depend on the factors such as the market positions, company performance, and etc. Is one of the most volatile investment, has the high risk return ratio. Number 2, one of the points will be one of the best investment options, generate the inflation adjusted wealth. Number 3, it will be suitable for the long term horizon, and you must know that bank account and demat account start to investment with also. Also, if you want to invest and benefit the stock investment constantly, you must be a high risk appetite and understand your functioning of the equities market before you start investing. Number 2 is that equity mutual fund. Equity mutual funds are the primarily invested in the equity markets and related to the security. They are the one of the best investment option in India, and the small investor who wants to benefit from the equity markets growth, that you can start investing in well diversified portfolio equity stocks at the little rupees 500 through the equity mutual fund. These are the funds can be invested anywhere between the 70 to 95% of the fund value in the equity stock and related to the instrument. Since there is the equity base, there is the high risk return ratio, and there is a two type of the equity mutual fund. Number 1 is the actively managed mutual fund. In this type of fund, the fund manager actively involved and expertise and the capability of their fund managers and play an important role in their performance of this fund. They choose the stock in the fund and will invest in the best of the research and analysis, and active funds are the considered the high risk, the passive. Number two is the passively managed fund. In that this type of fund manager doesn't play a major role. In this fund, the based on the particular index or market portfolio, for example, fund that build up a stock with the Nifty 50, etc., performance of this index determine the performance of this fund. Number three is the equity debt fund. Debt fund or bond fund are the investment option to consider if you do not have a high risk appetite or want to avoid the volatility. These are the also diverse portfolio in the fixed income security. In this debt fund, amount is the invested is the fixed income security, including the government, corporate bond, debentures, and other long-term fixed income security. Depending on the type of the security held in the portfolio, the funds can be varied the risk profile. You can also check the rating of the security held by the fund to access the risk before investing. The funds with the top rated security or the government bond are the suitable if you are stably of return and risk. That is the high. Number three is the safely the principle on priority. Note that the risk is the changing the interest rate and still it will be present in all debt fund. Number four is the National Pension Scheme, NPS. National Pension Scheme is the one of the government-backed investment plan and designed to help to secure your retirement financially and is regulated by the Pension Fund Regulatory and Department Authority. This help you to create a strong retirement corpus at your disposal. You can use the NPS retirement account as a salaried or the self-employed investor. There is a two type of NPS account, tier 1 account, retirement account, and the tier 2 account. The primarily difference between the NPS and other provident fund investment in the NPS allows the build up your corpus aggressively. It follows an auto rebalancing method to maintain a portfolio of the declining risk as your age. Additionally, you can avail the deductions of up to 2 lakhs of your contributions. The risk return on the NPS investment, it's depend on the portfolio mix you can choose and the length of time of stay invested. Thus, this retirement investment options works well the both risk adverse and aggressive investor. Number 5 is the Public Provident Fund. PPF is one of the most popular and best investment option for the people considering to put their money in the safe investment options. The 15 years plan is the best investment plan to safely achieve your long-term life goal, originally introduced as a safe retirement investment and the self-employed. The plan has a popular and long-term investor, and because it's provided, the number 1 is the tax efficiency. You can claim deductions under 80C up to 1.5 lakhs. Also, the maturity value of is tax-free. Number 2 is the liquidity. You can borrow from the accumulated corpus within first 5 years of account. After 5 years, partially withdrawals are allowed. Number 3 is the risk return mix. Low risk investment, the market link rate interest, which is revised every year. Number 4 is the investment period. Minimum investment of the 15 years. After that, you can extend it the accounts in the batches of the 5 years. With this, I am Ashish closing out the today's sessions. More such video, please do subscribe our channel. Also, this video is purely made for the educational purpose. There is no recommendations for that buying or selling of any stock or any of the funds. Please do your own research. Please consult your financial advisor before investing. With this second part of the investment strategy will be coming on next week, and till then, see you. Bye bye.